You want to know the key, the recipe to really finding success in trading futures? I've said this many, many times, and I'm going to say it again. You have to understand and learn market structure. I know I'm beating this thing to death, and I'm going to do it no matter how long it takes for people to really see the clear picture and the true picture of becoming a successful trader. If you want to be profitable, you want to find consistency each and every day. You don't want to ever get into this business with having the idea that you're going to become rich overnight or find success, meaning that you're going to make a mountain of money overnight. This thing takes time. Just like everything else, we have to start at the bottom and work our way to the top. Taking baby steps to make small profits on a daily basis is what's going to help you grow a small account over time. Whether you have $500 or $1,000, people always ask that question, is it possible to do so with trading futures? Yes, it really is. You can take a small amount of money and turn it and grow it, I should say, in time. I'm not saying you're going to flip 500 in one day and make 500 and keep flipping that way. Is it possible you could do that? I mean, you probably could do that by luck, but you have to start off, and I would recommend trading the micros for anybody who's trading with such a small size account. All right. Or maybe trading through the means of some prop firm. I don't trade prop firms. I don't know much about them, guys. And I don't really, so I don't have the information, the details about each one of them and which one I would recommend. That's not my lane. That's not my forte. My forte or lane is really show how I trade futures. And I trade primarily the indices, the NASDAQ and the S&P 500, which is quite funny because with the ES, I trade the E-minis. There really hasn't been any good setups or clear, good, lots of movement in that market so far this year that I found in the first quarter. So, but that's always been my go-to market since I really started. And it is a thicker market, so it does move slower. So you have to be more patient than you do with some of the thinner markets like the NASDAQ or the Dow. But when it comes to trading futures, there's a massive variety of different asset classes or markets that you can trade, whether it's the indices, the currencies, commodities, financials. It doesn't, they're there, okay? Lots of people are switching over from options into Forex because of just the uncomfortability or just the additional details of things that they have to pay close attention to. And futures is more streamlined, and to me, I'm not saying it's easier, I'm just saying it's more streamlined, it's more secure, it's a safer environment, a place to be trading if you day trade or even if you swing a position trade. But today I want to show you, and just we're not going to just show you, when it comes to the flow of the market, what are we looking for? We're looking for structural breaks, shifts in the market, whether the market's pushing up or down. And when the market is moving higher, you should be looking for what? Higher highs and higher lows, or this transition to the downside, lower lows and lower. And what I'm trying to say here is that as long as you can stay in the flow of the market and trade with the flow of the market, meaning pay attention to the structure of the market, understand price action, and can bring both those components together, I've said this before, you are more than 90% of the way there. Because when it comes to trading, yes, you can have a strategy, but the strategy is not going to do you any good unless you are able to understand and read the market correctly. Understand what's going on. Is it moving to the upside and we're trending to the upside? Is it moving to the downside and we're trending to the downside? Like yesterday, what did we do? We primarily just ranged all day, as you can see. All right. So in this area right here, before it started pushing towards the close to the downside, but structure is everything. All right. So we're going to go back. I'm just going to take a little time here, and then I'll give a quick, just a quick breakdown of the strategy, pretty much how I use it. But this has helped me grow my accounts over the years. I've been doing this thing for 13 years now. And I talk about the first 2 years, I struggled. I thought I knew price action, but I thought I knew market structure. Meaning I thought I was able to read the markets clearly. All right. And I said, oh yeah, I can do this. This is easy. I just go with the flow of the market, being able to see the market's moving up, look for pullbacks to go long, right? Market's moving down, look for shorts to go, pullbacks to go short, right? So, but it's a lot more than that. You have to really understand structural breaks, meaning breaker structures where the market is either continuously doing that to the upside or having shift to the downside. Okay, so we're going to go back just a few days and just kind of look at the structure over the last, just say, a couple of days here in February. Okay, and we'll look to see what the market's been doing. Okay, so let's just start from like maybe the 15th and move forward. Now, what we can see is the market's doing what? And follow with me, okay? It's making highs, okay, pulling back and breaking structure to the upside. So we got high. What this technically would be like a low, all right, because the market did start breaking structure to the downside, but it's just a significant pullback. But we have a high, a low, and then it makes higher highs to the upside. This is off my higher base chart, and I like to mark my zones from my higher time frame or higher base chart when doing so, and then moving down to a lower base chart in reference to the strategy, which I'll just quickly kind of cover towards the end of the video here. But I just want to show you the flows and the ebbs of the market. And as long as you're trading in the direction of the market, when we're looking for, I trade supply and demand. So let me say that. Supply and demand is aggressive areas of buying and selling. There are zones in which the banks and institutions, a lot of people don't really talk about it so much, are executing trades wherever you see big moves in it that happen in the market. Okay, so just for example, right here, the market pushed up here, it pulled back significantly or retraced before it started breaking to the upside. And as it was doing that, it was making swings within this bigger swing to the upside, breaking structure. Well, making higher highs and higher lows to the upside. So we have the market made this high right here. It pulled back and aggressive buying. That's aggressive buying. Who's doing that? The banks and institutions. Retail traders aren't doing that. When we see areas like this where the market is gapping and pushing away from an area real quick, especially when we get a major break of structure right here, after making a major break of structure to the upside right here above this area of 847, then we have to think to ourselves logically, I'm going to mark that zone. Why? Because it's a demand zone. Demand equates to aggressive buying. So when we see things like that, where we have, you see all these green candles to the upside, that's force. Okay, that's quick movement with lots of momentum to the upside. So when the market gets back here, we can look for something to happen, because a lot of orders probably didn't get filled where the banks, institutions were really driving force to the upside with lots of momentum quickly to the upside. Well, there are imbalances in between these candles that need to be filled. So when the market gets back to, say, this demand zone right here, something's going to happen. We want to catch the move, the train back going to the upside with them. So the market continues pushing higher. Higher highs, higher lows, higher highs, excuse me. And then what does it do? It starts making swings back to the downside right here, as you can see, right? All right. Start swinging back to the downside, okay, making lower lows and lower highs. We really are moving lower here, but it made a structural shift when it broke right below here at 881. So we break a structure back to the downside. You see that? Okay. Broke structure here, breaking structure going lower. Then it turns back around. What do? It breaks this high right up here, okay? Break that high up there as it moves higher. So we got to break a structure back to the upside, and it swings up. A high, higher low. Higher high, okay? Breaking structure continues to the upside, as you can see there. Then it comes back down, breaking structure below 871, and we swing lower. So we're just following the flow of the market as it's either making higher highs and higher lows. Now we're into the 16th, and what is it doing? Significant pullback here, okay, right here, breaking structure lower. Pullback, breaking structure lower. Pullback, breaking structure lower. Lower lows, lower highs, okay? Lower lows and lower highs to the downside, and this keeps doing that, okay? And at some point, it will hit some area of support out to the left-hand side of the chart, or maybe an area of demand, and then it may start breaking structure back to the upside like it did right here on the 20th. Okay, made a low, lower high. Boom. Don't pay attention to these boxes here, guys. Kind of just delete that out your mind, or eliminate that out your mind. I'm just trying to show you the flow and the structure of the market over the last few days. Made low, lower high, boom. Broke structure right here below this area 842. And then it started breaking structure as it moved back higher. Broke structure above here at 598. Okay. But look what happened. What did it start doing then? It started re-breaking structure back to the downside. You have to understand the market can at any given point do what it wants to do and quickly have a change in reversal or a shift change in the market. The market will do what it wants to do. It's our responsibility to be able to read what it's doing and trade accordingly, okay? So as it broke above this area here, broke structure, it turned back around, started breaking structure back down to the downside, swinging, making lower lows and lower highs. If you can see that, right? It broke below this area here. All right, right here at 452. Major low there, broke structure, okay? And then it just started pulling back here and then breaking structure again. All right, pulling back, breaking structure again, pulling back. That's why some of these boxes, like right here, I was marking to go short. These are areas of liquidity grabs. Back at the top end of a swing high here where the market just wicked out the area, broke structure. Wicked out the top here, broke structure lower. And then what does it do? What do you see it do? Shift, starts breaking back to the upside, breaking structure above these areas here. So we're just following, again, the flow of the market over the last few days. Then it starts to swing up, pulls back, deep retracement, break structure, breaks above here at 618. High, higher, low, high, higher, low. It's making all these small little swings, going higher, 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 okay? And it's really not breaking any area structure to the downside. So we're just looking for pullbacks to go what? To go long. So high here, pull back, break a structure, pull back, boom, taps into this demand zone, go long. We're following the flow, again, of the market to the upside. That's why market structure is I'm not going to say holy grail. I'm not going to say, I'm just going to say it is the most important core element to trading. Because if you do not grasp it and really, I'm seriously master this stuff, market structure, you're not going to be successful. And I'm not trying to tell anybody or discourage anyone. I'm just telling you the honest truth. If you do not understand market structure, meaning you cannot read the charts, whether it's pushing to the upside breaking structure, pushing lower breaking structure, understand when it's breaking structure, or if it's moving in range and sideways, then you're not going to be able to trade accordingly. All you're going to be trying to do is just capture trades based on a strategy, and you may get lucky. But just trading a strategy alone is not going to allow you to profit each and every day, meaning consistency. That's what we're looking for. In order for you to be profitable on a daily basis, you must be consistent in your trading. Yeah, the strategy one day may work, okay, because you get lucky, made some money. The next day you lose it. Next day you make it back up. The next day you lose it. You're back and forth, that seesaw effect, and that gets stressful and frustrating. And a lot of people experience that. All right, so moving on, we start to break structure back to the upside. We're continuing breaking structure to the upside here, making higher highs, higher lows. Okay, pulls back. Okay, really haven't broken any major area structure here. Break structure back above here at 18,087 or 88 area. Okay, and then it starts to deep retracement, break structure below this area here. As you can see right here below, basically right around 18,000, pretty much. Breaks there. Okay, now we're shifting to the downside. Breaks, pulls back, breaker structure to the downside. Big swing here to the downside. That's a big swing or a deep retracement, making a new lower low where there's a breaker structure at. Then what happens? Well, yesterday, this is where we get into the market yesterday, to where it started to swing back to the upside. Okay, we did get a breaker structure above here at 17,988. Within this swing right here, and the market starts swinging back to the upside, testing the high of the swing right here. It never technically, quote unquote, broke above it, broke above 18,000, say 64. It just moved sideways yesterday. And that was frustrating for a lot of traders that were trading yesterday, because you really didn't have a clear direction of really how to trade. Trading in ranges can be very difficult. Can you do it? Yeah, but you have to understand which direction truly should you be trading. And yesterday, I would only been trading in the upward direction, because we started to break structure back to the upside here. Okay, and as we were moving lower, we really didn't break any major area structure to the back to or any significant area structure back to the downside. We just had decent pullbacks to break structure back, going back up here. So we had this high sitting here, retracement, boom, broke structure. And then we were just in between this middle area right here pretty much yesterday. Then as the day went on towards the close of yesterday's trading session, we broke structure below this area here, say at 17,000, I guess 968, somewhere like that. So we had a high, higher, low, higher, higher, boom, broke structure lower below this area right here. And the market ran a little lower. You can see where it pushed down, pulled back, broke structure here. Down, pushing lower there, and breaking a little bit more area of structure down over here to the left hand side at 929, and then it bounced into the overnight hours, and we're starting to push a little higher here to the upside. So are we going to range more in this area today? I don't know. No one really knows, but the market is just at this time swinging back to the upside right now. So in the same zone, same area in which it was trading within yesterday. So be careful. But let's take a look at maybe just a example of a trade setup and the strategy. I'm just going to walk you through it and what I look for when it comes to taking trades. All right. So I'm going to show this. This was yesterday's session. I'm going to do the most recent, session in reference to the area or day on which I want to talk about, because that was the last time I traded, was in yesterday's trading session. This area right here, okay, we're talking right around about 1 o'clock yesterday afternoon. And I think I talked about this zone in yesterday's video, but we were breaking structure back to the upside here, okay? We had a high, higher, low, broke structure above, and there's a demand zone resting right here. Now, you hear me talk about low probability, high probability zones. I'm gonna take that box away. That box just signifies the demand zone, okay? If you're a new someone new watching the channel, maybe this help you out. I have tons of videos on the channel just like this where I'm walking you through the strategy. And I go right into it, but I also have trade breakdowns where I go into detail about the trades I actually take and break things down very, very simplistically, or if that's even a word, or very elementary in a sense, so that you can grasp and understand why I took that trade, my thought process leading up to those trades, and primarily, where I'll place the stops at, talk about that, and profit targets and things like that. So if you're interested in getting access to those videos, okay, they are through the Elite membership program. So you can simply just scroll down to the bottom portion of this video. You'll see a link that says become an Elite member. Click on that and make sure that you join the one that says Elite channel supporter or Elite channel member. It's $6.99, and that gives you access to the trade breakdowns, because people always ask me how can they become the Elite, gain access to the private videos for $6.99 a month. That's the Elite membership program. There's a link down in the description portion of the video, or you can simply click on the join button right in front of you. You'll see a button that says join, or a tab there, or link. Click on that. You'll see 2 tiers pop up. Again, the Elite channel supporter or Elite channel member is the one you want to join. But you also get the access to the video playlist of videos, okay? But anyways, I go into detail about this, about the trade breakdowns, again, the strategy I use. But there's also here on the channel, I talk about the strategy over and over and over, because I want people to really understand how I personally trade. I'm not an educator, I'm not a teacher, I'm not a mentor. I just been making these videos and this content for people to get an understanding of how I trade. Now, I'm not telling anyone or forcing anyone's hand to trade like me. I'm just sharing what works for me, okay? And what I have shared has been simply working for other individuals that have, that are part of my Discord community, those that have spent time, working through the strategy and understanding it and educating themselves on how to trade, like similar to the way I do, or maybe they put their own twist on it. Whatever works for you, I always say stick with it. If you got something in place right now that works, then stick with that, okay, guys? But let's talk about this one setup, okay? Because I like to at least give and talk about the strategy in my videos so people can get an understanding. So if you're a first-time viewer, take some notes. So I mentioned the market was making higher highs and higher lows. We're breaking structure to the upside, right? This area right here, going back to what I was saying about low probability and high probability, you see what the market broke up to the upside right here? I mentioned earlier in the video, that's aggressive buying. Supply and demand is all about aggressive buying and selling. And we're marking off key zones to where that aggressive buying or selling took place at. This is where it took place right here as the market moved higher and broke structure above 18,051. Okay. And the market's just open up right now. But anyways, getting back to what I was saying. So this area back down here, what I typically like to see is what's called a gap or void back at the zone. All right. Meaning that, see this last bearish down candle right here before the market shifted around, we had that big push to the upside. This green candle, that bullish candle that closed above that last down bearish candle, when it closed above the next candle that closed with it, or the third candle, you see the wick of it, it came back and filled in the zone, filled in the area or gap, which would have been back down to where I would have marked my zone at. So I marked my zone at the top end of that bearish candle, including the wick, down to the bottom end of that bullish candle, because all that is included, it should be included within the zone, okay? Because that that bullish candle right there, the wick of it became closed, not say closed, but it went below the last bearish candle. So I include that top end of the bearish candle to the bottom end of the bullish candle. The candle broke above and the wick came back and closed the gap there. That just means that if it filled the gap as it was moving to the upside, then it makes this zone lower probability for me. What I like to look for and see where there's a gap back at a zone, because then it marks that it's more of a higher probability setup. I'm not saying lower probability zones won't work. You just have to be, just like even a high probability zone, be very mindful of the rejection on your lower time frame, because that's where all the magic takes place, is on the lower time frame. So when the market breaks higher here and comes back to the zone, all right, we got to break a structure to the upside, aggressive buying, mark those things down. Trading supply and demand. I want to see where there's been a break of structure and a creation of either a supply or demand zone. Okay. And I want to trade in the direction of what's going on overall according to market structure. Structure of the market right now is moving to the upside. Okay. Because we're breaking structure to the upside. All right. And we have a demand zone, aggressive buying. Okay. That happened out of this break of structure to the upside. Market comes back to it. All I'm going to do is move over to my lower time frame. This same strategy, you could use it no matter the market. Okay, whatever you're going to trade, currencies, commodities. It works on futures, forex, options, but we're talking about futures because that's what I trade. All right, so now I'm going to move down to my lower time frame. This is around 1 o'clock yesterday afternoon, and we're going to look for the rest of the magic. What's going to take place now? What I'm looking to see happen before I switch over to the lower time frame is that we get rejection on the lower time frame on my 12 range chart, or the lower base chart on my 12 range chart. And when I get the rejection, and I'm going to talk about, you may be saying, well, what does he mean, the rejection? What is he looking for? We're going to talk about that. But I'm looking to aim to come back up to the top to start to feel these imbalances, these gaps in between these candles where they were selling back to the downside that approached the demand zone. So now let's move down to my 12 range chart, and we're going to look for the rejection to take place and what unfolds. Okay, and as you can see, I already have it marked here. That blue zone is that same zone that I showed you on the higher base chart, okay, 60 range. And I talked about this yesterday. I remember now. I talked about this same setup. But anyways, what we have here is that the market came back to the higher time frame or higher base chart, the 60 range chart. Demand, okay, in that zone. Once we get to the zone, then I'm looking to see where there's a shift in the market to the upside, basically where it's breaking structure back higher, all right? And I'm looking for a pullback to a key area of demand now on the lower time frame or lower base chart, the 12 range chart. This is my entry chart. Then the third part of it, which I'm going to show you here in a moment, is what we want to see happen that's going to give us the signal to get in. Okay, so look, we tap into the zone. The market moves up, starts swinging higher, making these higher highs and higher lows. It breaks through this area. Okay, so we get our first indication that the market may want to push higher. Okay, by breaking through or above 18,017.5. All right, breaks above that area, that level there. Pushes up, pulls back, pushes up, pulls back, boom, breaks above. So now we're getting small little structural breaks to the upside as the market's moving higher, taking out this area, this level here at 18,017.5. We got a small area of aggressive buying. What is that? That's the demand zone in which I'm interested in trading from. That's why I have that green box there. The market comes back to it. It is a high probability zone because it has not been tested on the lower time frame. So this is the third part. Once I get the break and close of that last down bearish candle, once the candle breaks above it, right there at 18,019.50 or 19 and a quarter, I'm going long. My aim is going to be for the market to come all the way back up here and fill back up here at its imbalanced area at 18,044. Okay, imagine you catch that move there, pulls back, get in at 19, and take it up to 44. Is that possible? Yes, it kept going to the upside to it filled 44. And I talked about this yesterday, but the way to stay in the trade, because people have a hard time, they say, I just can't, I get scared when I'm in a trade, it pulls back, I get out. Yeah, because the market is not just going to shoot straight up unless there's like some news or something going on. It's going to have its flows, its ebbs, pullbacks, up, down, up, down, up, down. It's going to do that because that's the way they shake and bake the market and shake traders out of trades. But the thing to do, if you want to hold the position and you got multiple contracts on, take out a majority of wherever you want to take it out at, at some maybe first area of imbalance or first, whatever, wherever you want to take it out at. It could be your first 1-to-1 or, whatever it may be. But the way what I like to do is when I see trades like this and I see we have imbalances and we have a nice zone to trade from, and I see a structural break here, pull back to demand, and I see we have those imbalances resting right there, I'm going to try my best to stay in that trade. And all I'm going to do is I'm going to take, I'm going to show you how to do this. Pull back, get the projection, go long. Each time it swings and makes structural breaks to the upside, where we made a high, a higher low, the higher low is the key. I'm going to move up my stop loss. So if I got into the trade right here at 19, right? Okay. And then the market went up and it comes back, it's going to break below, it's going to break possibly below your break even point, right? But you have to know where to put your stop at. Your stop's going to go right here at the back end at 18,013 and a half. But don't mark it tick to tick right there, okay? Give yourself some breathing room. So maybe come down here to 18,011 or 18,010. Give yourself a few points for breathing room right there, okay? Because sometimes they'll come back and they'll want to come tick to tick and see who's right there. Anybody home right there, and possibly want to stop you out because they're going to may want to grab some liquidity before they start pushing to the upside. So the market pulls back here a little bit, okay, and then it runs to the upside. So then once it runs to the upside and we get the break above here at 18,023, then move your stop up here. Each time it does that and pushes higher, then move your stop up, okay? But right here they're going to stop you out because they come back and they've pushed a little deeper here. So if you see something like that and with experience the market is really trying to push higher and fill those imbalances in, then you can leave your stop right here, all right? And even if you leave it right here, if you leave it right here, then yeah, I mean your break-even point, what I say was going to be right at 19. All right, they don't come back as far that far. All right, or maybe you want to put it up here. Oh, oops, sorry. Put it up here. Okay, at the top end. But I always like to put my when the market starts making higher highs and higher lows, I like to put it at the back end of the last higher low. If that makes sense. Okay, the last higher low right here. And when they made that pullback right there, then they're breaking higher. So once it broke higher here, then I can move my stop like right here. Okay. And then it broke higher here, pulled back, and then it broke higher and it hit 44. So I like to do that. Again, each time, once I'm into the trade and it makes a high and at the back end of the next higher low. All right. So it made a high, higher low, broke structure. I'm going to move my stop up right here. Because originally I'm going to have it down here. Or maybe a little bit below here, okay? Once I get into the trade. Once it breaks here, okay? Breaks here, I'm into the trade. I'm not going to quite move it yet until it makes its first run to the upside. High, higher, low, and pushes higher. Then I move it here. High, higher, low, and then it moves higher. Then I move it here. If you left it there, then you got stopped, but you locked in on profit is what I'm trying to say. So if you got in here at 19 and a half, and then you got stopped out here at 24 or and a quarter or 24 and a half, well, then what you did, you picked yourself up with 5 points. Real easy there, okay? It stops you out at 5 points. You didn't lose anything. You locked in profit. And that's what I'm talking about. You're locking in profit as the market does that. But if you clearly saw what was going on, where we're trying to go, then you could have, maybe you could have found your way and stayed into the trade by maybe pulling your stop back a little bit, lock it in, not putting it at break even, a few ticks above break even, and say I'm gonna pull it back to risk to see where it's going to go. You could have done that. That's what I'm trying to say. But it's easy to do the more you start practicing this. But again, structure of the market is everything in trading. Trust me when I say this, because it made the difference of me being, having moments just like most beginner traders do, to where they feel like they're struggling, they're not succeeding, they're having a hard time, and then they get to the verge of the point where they want to give up because either they're losing money or they're green one day, red the next day, they're breaking even, they can't find a level of consistency, and then it gets frustrating because they say that they can't make money. Oh, this is a scam. Trading is not for me. I mean, it's what you put into it and how long you are willing to wait it out to see if it's going to work for you. I never gave up. There's times where I did want to give up, but I just saw it through. I kept pushing. I don't know. There was something in me, and I have that on the inside of me that I just feel like I don't give up on things in life easily at all. Okay, so I do my best to keep pushing forward. But anyways, I just want to share this with individuals and people out there who are traders, who are new traders, especially because trust me, it's very possible. Just put your best foot forward. I'm showing this and providing this content because I want to see people profitable. And I know that you can become profitable and successful. You just have to really see the bigger picture is what I'm trying to say. All right. Structure the market, price action. Both of those are king. Okay, they come first before trading any strategy. All right, the strategy is just a component to use once you understand. Once you understand how to read the market correctly. All right, I'll leave you with that. All right, so if you're interested in joining the Discord, just find the link down in the description portion of the video. Below that, again, you'll find the link for to become an elite member. You're just supporting my efforts as a content creator here on the YouTube platform. I appreciate that. And in return, you're getting kickbacks as far as the rewards you receive, one of them being the trade breakdowns and the video playlist. So I appreciate everyone that has joined and been supporting me as a content creator and pushing out valuable content that has helped so many people within this community here, on this channel here. So thank you for all the wonderful and positive comments everybody's been leaving here on the channel as well. And I just want to continue seeing the channel grow, and hopefully it grows, because I believe that the more we see it grow and we can make this channel grow, the more that it's gonna reach the masses of more people. I want to see people succeed, because everybody's looking for a way out, in a sense, to where they can start something of their own and control something of their own and make money. Okay, right from the luxury of their own home. Okay, or no matter where they're at across the globe. But outside of that, that's all I have for you today. I appreciate each and every one of you. If you're not a current subscriber, please take the time to sub by clicking on the subscribe button. Turn on all your post notifications so you never miss one of the uploads. And last but not least, if you found value on or within the content of this video, please drop a like on the video. I will see everyone in the next one. Take care.